Hey traders, welcome to another edition of Elliott Wave Macro Cafe with your guest, the Cowboy here. And let's begin. It's been a couple of weeks since we've done the last video. I'm just going to make a quick reference on Bitcoin. I'm not going to spend a lot of time on it. If you guys want to watch my views on it and more explanation longer term and shorter term, just visit my video from last week. The next video on Bitcoin and Ethereum, it's going to be the following weekend. So with that being said, let's just look at this really quickly. So I have the red count that says we're still in some kind of a fourth wave that just kind of started but still looking higher. And then the other one, I have the pink count and continues to monitor the progression up here towards 63,000 before a fourth wave intermediate begins. But the trend remains up and I remain bullish on Bitcoin. All right, let's jump on our macro perspective in here and just start with our regular taking a look at oil. So oil remains bullish. We had a little bit of a sell-off here towards the end of the week, and what you see here, it's a one-day chart. I'm going to jump back up to a 1 week, and on this one we continue to remain bullish. We'll look at this as being a possible another move higher here through an A, move off those famous lows back in March, a pullback here in a short B wave, and then we're monitoring the progression up here in the C wave towards the top of the channel near about, between $60 and $70 oil, possibly this year. The other alternate I have that this could be a wave one of a much larger advancement in oil, but remains to be seen. So kind of climbing back down from a 1 week to a 1 day chart. In here, you can see the progression in a 1, 2, 3 triangle, 4 up in 5. Just a nice clean setback in 3 waves, and then followed by another impulse higher. We could still be forming this third wave minor in here. So 1, 2, 1, 2, 3, 4, 5. Possibly this third wave minor could be over as well, but I am remaining bullish. So I look at the possible small correction, maybe in oil, maybe come back here to revisit. Somewhere in the, let's say, between $45 and $50 range into oil, come back here and then push back up higher here in this fifth wave for a continuation higher. Again, I'm targeting the top of this channel, so the progression remains impulsive and I continue to stay bullish on oil. All right, I'll take you at the end of the video here a little bit over a rotation graph in terms of the sectors, and you can see how the energy sector, it's really bullish, and I think that kind of confirms also the price in oil that's going on. I have a little bit of a pullback here in the RSI, so even if we're getting something minor in here, I think it's going to be a buying opportunity. All right, from oil, let's jump on to gold. And I have a couple of counts. So longer term, I am bullish on gold. Looking at this, move up here in the 80s, right? Just a wave one, a super cycle coming back in 2, and that's another 1, 2 with the continuation much higher. The downside on this, or the risk, could be that this is just a B wave top, and that's an A wave bottom. So then you go in an A, you go up in B, still come back down in C before you actually embark in gold. Something that could work towards this is the fact that we start to have a rise in yields, especially in the real yields. So we got to pay attention what's happening on the inflation front, because that could kind of put pressure on gold if the yields continue to rise. And that would be an indicator that we could be pulling back here in a C wave in gold in terms of kind of trying to form this flat before the actual advancement in gold begins. But we're not there yet. This is just an interpretation that I'm kind of monitoring. So I'm going to take you to my primary one, which says that a wave 2 cycle was actually found in here at this lows back in 2015, and since then we're doing a 1, 2, 1, 2. I've actually modified this into a double 1, 2 because I wasn't really happy with the way this ABC kind of unfolded. It's possible, but this gives me a little bit better outlook in terms of how this progression here unfolds. So if I go in a 1, 2, 1, 2, then I have this 3, and I think this could be a 4. It's still clearly corrective, just like I mentioned a couple of weeks ago. We had a failed breakout in here, so this could be just another X wave in here, ABCX, and another ABC come back towards the bottom of this channel, retest it one more time, and then advance into this fifth wave. However, I continue to remain bullish. So from a 1 week, let's go to a 1 day in here. You can see how the market just turned back. Remember, I was telling you a couple of weeks ago that we were bullish. We took profits in here, but we got stopped out as the move kind of sold off again. So on our last bit of a position, we did get stopped out. Now I am kind of still looking bullish and try to reinitiate a position into the 618 of this move between 618 and 786 up into these levels. I want this here to give me a little bit more. So I want to see if this is an impulsive move through a 1, small 2, 3, 4, and 5. And then I want to see what happens as we climb back out of here. We're starting to break above. I'm going to look at it as being maybe a flat, but if this turns into a clean impulsive move to the downside, I'm going to have my worries and thinking that we could start to attack and maybe break lower, and then the other count will kick in. So I'm kind of cautiously bullish on gold, and I'm waiting to see what happens here. I want to reinitiate my long positions as we're getting a little bit more data coming out of here, because if that's a WXY and this was a clean impulse in 2, it's maybe a sharp down here in the second wave, and that's a 1, that's a 2 in here, and then we go 3, 4, and 5, and we move, past $2,000 mark in gold. So that's kind of my view for right now. All right, the next one on my list here, it's the 10-year yield. So for that, I'm going to jump over to here. I've talked about it a couple of weeks ago, where the 10-year yields actually were just about to break the 1% mark, right? And I've kind of stressed that point, that the moment we break up higher, that's going to be an important thing happening in the market, and a lot of people are going to start to pay attention. You can see also the sell-off in gold, a little bit of a return into the dollar. Not very aggressive. I'll get to that in a second. But right now, we sort of pull back in here with it about 108, but I think the markets are going to try to maybe retest this breakout level and then turn back and go up higher here and go for the next level of resistance, which is near 140. So when you get to about 140 into the yields, we might get a little bit of a response from the Federal Reserve. We'll see what their comments are going to be regarding controlling these yields, because they really don't want them to get too high before they step in. I think they kind of want to keep that under control. So kind of climbing back here from a 1 week to a 1-day chart, that's the idea. Actually, let me just kind of quickly go back, guys, because in terms of the wave count, could you consider this as being a 4th wave and we still can drop in 5? I mean, I think it's a little bit of a stretch in terms of a right look. If that's your 3rd, right, I would have to consider this, at 3rd wave, and then that's a 1, that's a 2, that's a 3, right? And as long as we don't get above this level, this 4th wave in here could still be valid. So it could be maybe an ABC WX. So it's some kind of a clean corrective move up into these levels, and now we're supposed to sell back off here and do a 5th wave. I mean, this would be a major development for the overall markets, because you're going to start hearing talks about yields going negative and a double dip recession, and stocks are going to sell off aggressively. So if this happens, you're going to get a huge move up into the bonds as the yields get lower, and that's going to destroy the markets. So that's kind of the risk that can happen in the yields here. But overall, I think I prefer this better, that this is a final move in here and we're starting to kind of recover. So I remain again kind of cautiously bullish on yields and just looking to see what happens the moment they return back here, and see what kind of reaction we get, because this kind of stays into the overall theme that I have, and that you can kind of hear more of the macro funds and guys talking out there of this kind of reflation and reinitiating of a trade into the energy, into the financials, and these are being helped by move up in yields. All right, so that's on the 10-year, and with that, let me go to the dollar index. So dollar index, I think as I was talking last week, we were continuing to expect a move lower. Now, we never took down these levels just yet. I think the dollar still wants to do that, and we are coming very, very close to it without like the cake is right there and we're not touching it just yet. So I think the market is going to want to take the stops that are below these levels. So dollar index lower, euro dollar a little bit higher before we get a more meaningful retracement in here. And that is kind of coming back towards this channel at about 88, 87, maybe even dip down here towards 86.5. So I'm still looking towards this equality between these moves, which hasn't been fully established yet. We got to still sell off a little bit. So you can argue that the move is complete, and that would require us to kind of start to push back in here and then maybe get back here towards 94 in the dollar index before it's all over. But let me just kind of go back and take a look at the 1-day chart and how that looks. So 1, 2, 3, 4 with a sort of an extended 5th in here that gives you this larger 3rd wave intermediate. So 1, 2, 3 up in 4 here, and then do a 1, 2, 3, 4, and 5, or still fourth wave, it's still in progress. So that's kind of the risk that I'm having in here. I don't think I have a clean 1, 2, and 5, 3, 4. So it could be that we're done. 1, 2, 1, 2, 3, 4, 5. So that's third, that's fourth, and that's fifth, right? Or this fourth is still in progress, right? You still have maybe that's third all the way down here, and this fourth still forming, or you're getting some kind of a triangle in here, and you got to push one more time lower, right? So I want this market basically to start climbing a little bit higher to get more confidence, at least get above these, let's say, $91 mark. If it starts to push above here, and you're actually looking at the retracement, you know, when you're looking at the fourth wave, you're looking at how much higher climbs in terms of fib retracement. If you're starting to get above 382 towards 50% of a third wave, that means that you're starting to negate that fourth wave possibilities. So if we're starting to climb, back above these marks in here, the likelihood that we have found a low in the dollar index increases significantly, and then we're going to go back to possibly retest these levels, and that could put again some pressure onto the commodities and onto the markets overall if we're climbing up into the dollar. All right, so that's on that. Now with my discussion kind of being over regarding with what I wanted to cover, let me just take you and show you some rotations in here based on what I've talked about so far. So what I've done here, and this is a kind of one-day relative rotation graph, and I want to kind of have you look at this and see what's the strength of these markets that I've talked about, comparing, for example, with Bitcoin. And I introduced this last week, and I want to kind of keep talking about it because I think it's important. So if I'm using Bitcoin as a mark, right, and you can see here on the daily time frame, we're starting to improve as Bitcoin is sort of taking a pause in here as a benchmark. All these quadrants here are improving, and I have leading, I have weakening, and I have lagging. So you can see how we climbed, since last couple of weeks we've talked about when all of these were kind of lagging against Bitcoin, we're starting to get into the improvement quadrant. And oil kind of leads up here, followed by the dollar index and the S&P 500, and gold and the 20-year bonds. So I'm really interested to see, what's going to happen in terms of this rotating and Bitcoin taking a pause. That's on a one-day chart. On a one-week chart, as you can see, they're still deeply lagging Bitcoin in here. So it's a very good performer, continues to be. You can see how oil is starting to turn, and starts to want to get a little bit of a momentum here and maybe push back up higher. So this is on a weekly time frame, but Bitcoin, it's outperforming them, big time. And then if you go on a monthly time frame, that's even deeper on that in terms of momentum. So they're lagging a lot. So Bitcoin, it's a big leader on here. All right, you can see oil is kind of turning also on the momentum on the monthly chart. All right, let me just kind of take you also to see a little bit of the overall asset allocations and kind of how the overall market works against the index. And the index, what I have here, I have the Vanguard Balanced Index Fund, and that's up there on the middle. So if you look back on here, and this is a 1 month relative, these are commodity indexes in here. So this is the GS1, this is the DJP, and you can see how the commodities are starting to get into the improving quadrant comparing with the overall markets. Now the ITOT, which is the S&P Total US Stock Market ETF, this one continues to lead, and this is because people are still involved into the stock market overall, but the commodities are starting to gain ground in here. So if I go back, and you can see maybe in 2019 what happened, and then back into 2018, the market and the commodities were up there into the leading quadrant, but the commodities started to lose value. The markets just kind of went back into the weakening quadrant, but then we're kind of turning in here and kind of going back up. So they're still, a pretty good leader while the commodities are losing a lot of ground. The markets, the ITOT kind of pushes back here into that leading quadrant. So it's still a very good performer, but this is an early indication, at least on the monthly chart, that, some of these assets are starting to move from the markets overall here into the commodities. And you can see kind of, the REIT ETF starting to turn a little bit in here. The dollar index continues to be very, very weak on a monthly basis in here, along with this treasury bonds and, even the high yield corporate bonds. So that's on a 1 month chart. Going to a 1 week. In here, the commodities are starting to pick up a lot of steam. They're actually leading in here as the overall markets are starting to flatten out. And then you can see how, also the REITs are starting to get a little bit of a push back in here, back into the leading. They were weakening a little bit, but most of these, the dollar index and all these bonds are into the lagging quadrant. So you want to be involved in the commodities in here and into the markets overall. But these are just kind of starting to lose a little bit of a momentum. We'll see as this arrow will turn. That's on a 1 week basis. If I go on a 1 day, you can see how, we're starting to lose ground a little bit. So all of them are starting to point lower, the commodities here. Maybe it was because of the move up a little bit in the dollar, over towards the end of the week in here. But they're still kind of in a leading quadrant on a daily time frame. Same for the stocks overall. These are clearly outperforming the market. So these kind of help you and give you a little bit of an idea on where to position overall regarding the markets. All right, let me take a look at the S&P 500 as well. And these are the sectors that are into the S&P 500, and you can see how the energy, this is in a 1 week, you can see how the energy here is a clear leader, and then you can also have the financials, right? The rest of the sectors are, if not in the weakening quadrant, they're in the lagging. So you can look at utilities, real estate is starting to turn a little bit in here, and you can have the consumer staples. So all of them are just kind of, not doing much in here, and just kind of maybe preparing to make some moves, but these are kind of clear leaders. And I'll show you a little bit of a rotation that happened, let's say, since last year, right, in 2020. You can see how the tech sector here was leading in the leading quadrant. You can have utilities kind of going back there, and then, look, as the energy sector starting to lose up here in the improving quadrant, XLI starting to get into it, XLU, and the energy start to have big shift here since what was this, November, right, 2020, and it clearly started to outperform the markets overall. So just something to watch. Let me just kind of take you also on a daily basis so you can see a little bit of this rotation, right? So clearly you got energy leading, you got financials, you've got the material sectors, and then on the lagging quadrant, you see how you can have a rotations here out of the technology sectors, moving more into this material, financials, utilities, industrials, and I think that's quite important to see this rotation. This is on a monthly basis, so this is very important because if you're looking, let's say, a year from now, and you kind of wanted to start to shift out of this tech sectors, and you're looking more towards the materials, and maybe the financial sectors here are starting to gain ground, the industrials, and what is the energy on here? Right, it's kind of all the way back here, but they're all kind of starting to point up. So you can see how the rotation starts to happen, maybe a little bit out of, not yet, but it's starting to gain ground, right? So the tech sector is going to start to lose ground maybe over the next few months, and a lot of funds are going to start to move up here into the energy, financials, industrials, and utilities and materials, right? So let's just kind of pay attention to that and see where these go. But yeah, I'll leave it at that, guys. And again, come and visit us into the Pro Room. I present this almost on a daily basis to all the clients that we have on there. We focus a lot on the crypto markets, but more and more on the stocks and equity side, and we talk about this kind of shifts in the market and how we can position ourselves for better trades, and then this way we can pick some good stocks and some good sectors as well, besides the crypto. But for more information, there's also a public forum that we have up there on the Telegram. The links are below, and also we have a pro room that you can take a trial and be part of all these discussions. And we have also a live trading room where I present all the trades that we take on and all the positions with entries, exits, and stops, and so on. So give us a try. If not, I'll see you next week for Bitcoin and Ethereum technical analysis, and then in a couple of weeks for the next Macro Cafe. Talk to you soon. Bye-bye.